Okay, good evening, guys, ladies and gentlemen, whoever is watching. Okay, this is NZD USD. I took some beautiful trades here, but I cleared the chart, so I want to start it afresh so that it will be easy for whoever needs it to understand. Okay, basically, we use the bigger time frames for what to know market direction, like directional bias, stuff like that. Like the 1 day, sometimes for hours. Okay. So let's for this my trade that I took. I didn't really go to the 1 day because there are no much things to look at the 1 day. So I just started from 4 hours. So for the 4 hours time frame, basically we've seen this already. Trend bias what? The buy trend. Obviously buy trend. So what, you cannot trade out of this structure we are seeing here. So what, we scale down to the lower time frame, like 2 hours, 1 hour, and stuff, looking for desired market structure based on the strategy we trade. And mind you, I do SMC. I trade SMC. So what you are seeing here, let's also scroll on to the 1 hour time frame. See that the market has given us some structures: a high, a higher high, another high, and one more higher high. And what did the market do? The market came down to this point. And obviously, what have we been seeing? The market goes up, come down, goes up, come down, goes up, come down. It has gone up and come down. Definitely was to push up. So at this point, another confirmation here that the market is also going to push up, maybe a little bit, maybe come down to sweep at that low. Nobody knows, or go up. Whatever the market do does not concern us. But what to look for is that particular strategy, that concept that we use. Just wait, once it plays out, take our trade, and we leave the market for the rest of the people that are doing whatever they are doing to be doing. So this actually is a liquidity that the market took out and what started pushing up. Most people can call it sell stop, and the market chased to that point, swept it, and what started pushing up, which I'll mark as what X. Moving on, if we look at this whole place here, there is nothing to do. Like, from this angle, from what you are seeing here, we don't know what to trade from the 1 hour time frame. There is no confirmation on what to trade here. I would have caught this trade, but I didn't subscribe to the professional mode of trading this, so I can't do that cutting stuff. So from this place, you can see that there's no confirmation. There's nothing visible for us to trade. So what do? We scroll to this smaller time frame, 30 minutes or 15 minutes. In this case, I'm using 15 minutes. Mind you, I made use of 15 minutes and 30 minutes for all the trades I took. 15 minutes, 30 minutes, 5 minutes, and 1 minute based on the time frame. So looking at this range, what do you see? Saw a breakout structure here. Mind you, this high is not valid. This is not a valid high. Could have been swept at any time. And there is no proper trading structure around this area. All this area like this is the proper trading structure. To me, maybe other people might see, but me, I don't see any proper trading structure there. So what? I waited and watched the market. Though I did not catch most of the sales I'll show you here, but the one I catch, I'll notify you. So looking at the market, so the market was give us a breakout structure here. But this is also a breakout structure. But the market swept this high, confirming that what the market has X. Confirming that this high here is valid. It's protected rather. So what did the market do next? The market broke out here. Market broke out and sorry, let me draw my line properly. So the market broke out. What? Give us this as liquidity, and what? Give us this that swept liquidity. And mind you, this is your breaker block here. This is actually a breaker block entry, because I do trade breaker blocks, other blocks, and stuff like that. So it gives us this liquidity, and this liquidity did not mitigate the breaker block. I'm going to tag the liquidity as X. This liquidity did not mitigate the breaker block. So what do? This is a confirmation for us that okay, this it has given us this liquidity, and what it's going to sweep and push up to the breaker block, and what set to the downside, because there's no actual liquidity at any of this region. There's no actual liquidity at any of this region. Only where we have liquidity is at this region here, and what the liquidity did not mitigate the breaker block, so therefore there's no need going to the upside to that other block to go and take your trade. You just take it from the breaker block. As long as the liquidity did not mitigate the breaker block, take your next entry for the breaker block, and what sweep to the downside below the recent low. So this is actually a very beautiful sell at the beginning of the breaker block. So most people can take it from the body, some from the week, and what a little bit higher than the breaker block, where the market manipulates, and what to the downside. Wherever you can take, most people will take 1:2. You can take 1:2 as it goes. So after that, we notice that we have a breakout structure here. This is a breakout structure, and then what the market pushed to the downside. That pushes to the downside, if you notice, the market came up to this other block here, then sell. Why did the market do that? Because there's no actual liquidity in any of this angle. There is no liquidity in any of this angle. So what did the market do? The market came up into this other block here that originated this previous sell, and sell to the downside. Although even if I had saw this particular trade, I wouldn't have taken it. This trade, even if I saw it, seen it earlier, I wouldn't have taken it, because to me anything could have happened. It would have swept this high a little bit. This high, it would have swept this high and what started to push down. So we don't know. So I wouldn't have taken it. So what the market gave us another beautiful breakout structure. This is another breakout structure. The most people will actually take this trade, but me I wouldn't have. So after the market gave us that breakout structure, this was when I noticed the market. I now scroll across the chart, analyze, and I noticed this range. This was from this range I started noticing what the market. So what I noticed that the market has given us. I noticed the market gave us what this set of liquidity, set of highs to see. All these are liquidity, trend line liquidity, trend line liquidity. Market gave us this set of liquidity to sweep, and what, like I said previously, it did not mitigate your breaker block. Your breaker block. This is your breaker block. It didn't mitigate what your breaker block. None of this liquidity here mitigates the breaker block. Seen it. So what? After I saw this, I waited. The market started pushing up. The market pushed up, tapped into the breaker block. I left my entry here. Stop loss slightly above the breaker. And what? 1:2 or 1:3, depending on what you do. Or to sweep this liquidity, because it was close to this point I mapped as liquidity, to take it out. To take this point out I mapped as liquidity. I actually caught this particular trade. So after that, what did I do? I waited and I saw this breakout structure. And what? I saw this high here. But then there is no liquidity here, there is no breaker to take any trade from, and I wouldn't want to take such trades to be risky. So I just waited and the market just gave me this. the market gave me what? This push up above here. Normally this is liquidity. I would take this on a normal day as what? As liquidity. Then what? Then the market what? So it's supposed to come into this other block here. This is another block. If you scroll to a lower time frame, you see that's another block. The market would what? Come into this other block here and what? Push to the downside. To come into the other block and push to the downside. If you're a trader, a trader, you've been trading for some time, you know that trades are normal. There are winning times and there are losing times. So if I took this trade, it would have been a loss. So when I came, the trader has already played out like this place has already passed. So I was like, okay, there's nothing here. So if you noticed, the market came up to this point, what? Pushed down, another pushing down. It came back up, tapped into this other block, and what? See, it actually sold to this point. It would have been a beautiful sale, but then what? The market did its thing as usual, pushed back up and swept this high. That was when I confirmed that okay, fine, this is now what? A breakout structure or a market structure shift, like others will say. Market structure shift. This I wouldn't have confirmed only here as a market structure shift if this high wasn't taken out. So this high was taken out, so therefore this was confirmed as what? A market structure shift. Take note. So this high was taken out. Highlight it. Clearly, those of you that have been trading, you know what criteria of a valid breakout structure, valid market structure shift or change of character. How the candle is supposed to close above and not the wick or not below, stuff like that. So after giving all this breakout structure, what did the market do? The market went up, what? Retest into this zone and what? And pushed up. Getting to this point, the market started dancing up and down, up and down. Me seeing this now, I already know what to do, because what? Market gave us this breakout here. What? Give us that breakout. Let me move this line chart so that it's not be confusing. So the market gave us sorry. The market gave us this breakout here. Then it tried to break out this place, but what? It couldn't break out. So therefore this place now is liquidity. Here is liquidity. The market will seek that high. The market will seek that high because this high is not protected. There's nothing valid about it. So from this point, I know that okay, definitely there is liquidity resting what? Above. There's liquidity resting what? Above. What just happened? Liquidity resting above. Seeing that alone, I know okay, this is my new low. This is my new low, definitely. And this is what? This is also a liquidity because the market pushed. This is also liquidity that needs to be taken out too. The market can do whatever it does, but it will come back to this point and take out this place. This is also okay. Let's say this is an inducement. It's an inducement. This inside one is an inducement. So what? Inducement resting below. Inducement resting below. Put it here so it's not obstruct. So seeing that this inducement is resting below, what did I just waited. The market did all he had to do. Manipulated. I knew it would come down. Manipulated, and what? Finally, it swept. After the market swept, or before the market swept, I've already analyzed my order block. I know where my entry is. This is a very valid entry model that I'm not going to say right now. But for the sake of other people that really need it, I'll tell them privately. So not that I can't share though. Anyways, the other block model is not hard. It's just a simple entry. Just go and watch other blocks video. You understand it. You understand it. Or maybe during my next video, I'll talk about it anyways. So there's no big deal. I'm going to write this. You see, you're going to see it right here. So this, the last candle, the last bearish candle before the bullish move, that is your order block. That is your order block. So there are criteria for knowing a valid order block actually, and this is actually a very valid order block. Maybe in my next video I'll talk about that. So this is my order block. I know that okay, definitely there's liquidity resting above, there's inducement resting below. The market is going to take out the inducement, come down to that order block, which is very much protected and very much valid, and then push upwards to sweep the the liquidity resting above. So most people would take their entry from here, stop loss below the order block, and what TP to the recent high is actually a very good profit. But actually, I refined my entry. Those that do trade, you understand what I mean by refining my entry. So after refining my entry was, yes, I think at that point that was where my entry was. This was how my trade looked like. Sorry. This was how my trade looked like. Stop loss below TP, liquidity. So this was how I caught this beautiful bag. Okay. This was basically it. I was supposed to catch another entry at this point. I'm not going to talk about it here. Maybe later. I was supposed to catch another entry at this point here. But what the market does is things like I said. We don't have to. We don't predict the markets. We anticipate it. We see what's happening and we just wait for it to happen. As it's happening, we take our positions, stuff like that. So I was anticipating the market to get to this point before hitting the TP, so as I can take another trade from it, but the market didn't retest to this point. So hitting the TP, there is no need taking this trade, so this place is no more valid. So this is basically how the trade went down. And mind you, why also analyzing other blocks and breaker blocks, you cannot know which one is valid from a single time frame. You have to adjust your time frame to know which of them is a valid breaker block and which one isn't. Take a look from 30 minutes. Look at this breaker block, very clear and very precise. Most of my breaker block was from 30 minutes. The smallest entries that you see are from either 5 minutes or 15 minutes. This breaker block here is actually very valid. As you can see, this breaker block here, see, very refined. This too is very refined, but this was majorly from the 15 minutes time frame. So this was how I caught one sell and one buy. I didn't catch this sell. But what I caught this sell, and I caught this buy. Basically I caught this trade. So I hope you understand this. It's not very hard. It's that simple. You just need to know the market directional bias, get your inducement, get your liquidity, know what to do. This process, if you watch this video over and over again, you understand it. It's not very difficult, this process. So thanks for watching anyway, for those that watched, and I hope this really helps.